So hi guys, this is SJ speaking, and in today's video let's see about what is standing deposit facility, so which is known as SDF. So before going into the video, I'm personally teaching trading. So if you want to join my mentorship course and learn trading from me, I'm totally taking 7 courses. You can enroll in any one of the 7 courses. It consists of technical analysis, fundamental analysis, both separately and combined together as one single course. So if you're interested, you can call me and have the details. So let's go into the video. So let's see what is standing deposit facility. So it is known as short form is SDF. So SDF is one of the monetary policy instruments introduced by the Reserve Bank of India. First, it was recommended by Urjit Patel Committee, the expert committee, on January 2014, and then in 2018, the Reserve Bank of India Act was modified, and so Section 17, I think so. So it was modified, and then in 2022 only. In April 2022, it came into action. So SDF was introduced. It came into action. So SDF rate is the interest rate that the RBI must pay the commercial banks for borrowing money from them. So standing deposit facility means simply the central bank RBI borrows money from the commercial banks, and for the borrowed money, it pays for some interest, and that interest rate is known as the SDF rate. So you might wonder, so reverse repo rate, that is also the same concept. So this is also basically both are similar, but there is a single difference. Here, for borrowing under SDF, the RBI need not give any government securities as collateral for borrowing money from the commercial banks. So thus SDF is known as a non-collateralized monetary instrument. So it is non-collateralized. For example, so basically SDF was brought to observe excess liquidity from the commercial banks. Suppose if the RBI wants to observe for around 10,000 crore liquidity from the banks in order to control inflation or whatever it is. So if the banks must give this 10,000 crore to the RBI, then the banks must have some benefit. That is why the RBI is paying some interest. In case of reverse repo rate, it is known as reverse repo rate. In case of reverse repo, it is known as reverse repo rate. In case of SDF, it is known as SDF rate. So the difference is here the RBI must have, in case of reverse repo, the RBI must have 10,000 crore worth of government securities, GSEC. So if it doesn't have, it can't borrow. So if the government has only 5,000 crore worth of government securities, means then it can get only 5,000 crore money from the banks. But if it needs all the 10,000 crore, means it must purchase some of the government securities from the government, and then it has to give to the commercial banks. So if the RBI doesn't have, it can't absorb the liquidity from the commercial bank. So in case of SDF, so this is removed. This struggle for the RBI to get the government securities, this is removed. It does not give any collateral. So that is the difference. So in case of reverse repo, the government securities are sold, and the interest from the government securities is also paid to the banks. So because it is actually sold, and under the agreement that those bonds will be repurchased, that those securities will be repurchased at the later date by the RBI. In case of reverse repo, but in the case of SDF, no collateral is involved. So simply the RBI can get the money from the banks, and it will pay some interest, which is known as the SDF rate. So currently the SDF rate is 6.25% as on April 1st, 2023. So RBI SDF was mainly brought to observe excess liquidity from the banks. So now let's see about what are the current monetary policy rates as on April 1st, 2023. So the repo rate is 6.5%, reverse repo rate is 3.35%. So it is usually unchanged for so many months. And MSF is 6.75%, bank rate is 6.75%, SDF rate is 6.25%, CR and SLR is 4.5 and 18% respectively. So this is as on April 1st, 2023. So for viewers who watch this after 2 or 3 years, this might have changed. So you should take a note of it. So there is a thing called LAF corridor. So LAF refers to liquidity adjustment facility. So I will explain this in a different video. So usually there is repo rate, and there is SDF here, and there is MSF here. So usually this is 6.5, and this is 25 basis points less, that is 6.25, and this is 25 basis points more, that is 6.75%. So this is basis 1 basis points is equal to 0.0001, which is equal to 0.01 percentage. So 25 basis points means 0.25 percentage. 50 basis points means 0.5 percentage. You should take a note of it. So basically, there would be difference. Usually SDF is 25 basis points lower than the repo rate, and MSF is usually 25 basis points higher than the repo rate. The bank rate is also equal to the MSF rate, but you should take a note of it. So these are the things, but this can also change. So this is the fact. So usually the floor is, this is the floor, and this is the ceiling, and this is the middle thing, so mid thing. So when the repo rate changes, automatically the SDF and MSF is also changed. And before this SDF was introduced, usually the reverse repo rate will be here, but now after the SDF was introduced, the reverse repo rate was unchanged, but still the reverse repo rate is not eliminated, so it is still there in the monetary policy, but the SDF is now being updated regularly in spite of the reverse repo rate. So you can take a note of it. The only difference between the reverse repo rate and repo rate, in case of reverse repo rate, you have to give the government securities and borrow money from the banks, whereas here you no need to give the government securities. And another thing is that in case of repo or reverse repo, so it is at the RBI's discretion. So RBI's discretion. So terms and conditions of the contracts of the loans are the RBI's discretion. So RBI has the authority over it. But here in the SDF and MSF, so SDF or MSF, it is at the bank's discretion. So bank's discretion. The banks has the authority over the terms and conditions and the contracts of the loans. So because as if the collateral is also not given in case of SDF. So MSF means it's an overnight loan. So I have posted a video regarding MSF. If you didn't watch, you can watch that. I have posted videos on all these monetary instruments, repo rate and reverse repo rate and SCRR, SLR, all that. You can watch the separate videos on my channel. So this is what the SDF stands for. So only recently on the 2022 it has been brought up by the RBI. So hope you guys enjoyed. You would have got a good clarification about this SDF. Hope you guys enjoyed this video and you have learned something from this video. So give a thumbs up if you like the video, share it with your friends and family, and subscribe to my channel, and also press the bell icon so you get notified for all my videos, and comment on my videos. It will be a feedback and motivation for me. And other than that, if you want to learn trading from me, you can contact me from the number below. I'm taking 7 courses regarding it consists of technical fundamental analysis separately as well as combined together. And also, if you want to open a Demat or trading account, I have given you Zerodha and Ally's Blue link on the YouTube video descriptions. You can see that and open the link, and you can open your trading and Demat account and start trading or investing from today onwards. Other than that, if you want to listen to my videos on Tamil language, there is another channel, STS Trading School Tamil. You can listen that. So thank you guys. I'll visit you on my next video. Until then, bye bye. My videos are not only for trading or investing, it is also for financial concepts, many financial concepts, banking. Those who are preparing for bank exams, my videos will be useful for you guys. So that's it. So thank you guys. I'll visit you on my next video. Until then, bye bye. Take care.